What's going on, guys? It's Expo Jesse. Today is going to be the first edition of a series I call Teaching Tuesdays. We'll see if I can keep up with it, but Teaching Tuesdays is going to be obviously exactly how it sounds. Every Tuesday, something new until either I run out of content or I think I've covered everything I know. So for today, very popular request is how to add into a position. So for me, if you've seen me trade futures or even options, you've seen those trades that seem like they have a trillion trims, right? I'm just trimming left and right. And the way I can do that is because I'm adding into my position while it's going into profit, right? So the foundational principle is that I want, when I'm in a trade, when I'm going to put money at risk, I want to be very, very aggressive when I'm already winning a trade. That's when I want to have the most risk on the table, is when I know I'm already winning, and I want to have less risk on the table when I'm losing. So, one question I got even yesterday from one of the members was how I add into a position. So when you see my alerts, I'm either in at a partial or a full position. It can be either one. And that's why it's so important for you to have your own bias and your own trade system and use me just as confluence, right? You don't need me for trims. You don't need me to tell when I'm entering, what I'm entering, how big I'm entering. You just need to see that I'm long or short. That's all. And that's really the confluence that all the successful members that use my alerts, they just use it as confluence. They already have their own bias. They already trade the way that they want to trade. And then they just use me for that extra, confidence boost, essentially. So if I'm in at a third position and price goes against me, I'm going to be very, very hesitant to add into a position, right? Maybe a year ago or 2 years ago, I would dollar cost average into pretty much anything that was going against me and get out at break even. But what I found was that my losers started to size up, and my winners just weren't really matching where I think that they should be. So that's when I started really shifted my focus to these 5 rules that you see here, and trying to get my winners to be bigger than my losers. So today I lost 2 of 5 trades, ended up being pretty green, and that's just mostly because the last trade that I took, it was a 500% winner, so a 5R, so 5 times my risk, and I added into the position. So not only did I get 5R on my original position, but I also grabbed 1R here, 1R there, 2R if I'm taking a 10-point trim, etc. So without further ado, let's get into how I add into positions and get those big winners. So rules for adding to a position is it has to be about 1/4 of the size. I'll go between 1/4 and one half of the size of a normal position. So let's go with let's say my normal position's 10 contracts, 10 micros. If I'm adding with 2 contracts up to 5. But obviously that my position size changes depending on my stop loss. So I'll go up to 2 or 3 minis, but down to 5 micros depending on how wide the stop loss is. So it really just depends on the normal position size is about 10 to 15, and I'll go with an addition or an add-in at about 5 micros consistently. The second rule is it has to be an entry that I can justify. I'm not just going to chase. So if price is breaking structure, that's one rule. So let me type this out actually. So rule justified ads. One is going to be breaking structure. So what I'll do is I'll put a buy stop or a sell stop right above or below that structure. So if we're in bullish structure, I'll put a buy stop right above that structure, because what's going to happen is there is a risk that it goes and just wicks up, takes me, and then goes back down. But what I'm really betting on is that it's going to break structure and just shoot up. And that happens more frequently than not when I'm adding into a position. So breaking structure. A second one can be a 2 down candle, a 2 candle, I'll say. So if you don't know what the strat is, first of all, I have a video on it on my YouTube channel. Watch that. This will make a lot more sense after that. Or there's a ton of content out there about the strat. So a 2 candle basically is a break of structure. So a 5-minute 2 down means it broke structure of the previous 5 minutes low. And so it's going to continue going down. So 2 candle. And then the third is a fair value gap. and the fourth would be a Fibonacci. So you'll see that there's a lot of similarities between when I add into a position and my normal entry, right? So that is because I'm treating them as such. It needs to be justified with my normal entry. So if I'm adding into a position, I want to have a similar setup to when I'm getting in it for the first time, right? So third rule, I have to already be in profits and trimmed the position. So it's pretty self-explanatory. Fourth is open P&L can never go red. So I'm already going to be trimmed. So I already have closed P&L or realized profit. I can never have unrealized profit that turns red. And the fifth is I need to be aggressive trimming on the partial adds. They are just whipped cream on top of the dessert. So think of it like, I'm already in a winning trade. I've already got the slice of pie on Thanksgiving. This is just the whipped cream on top to make it even better. So with that said, let's look at an example from today. So I'll use, if you've seen me trade, I'll use the 1 minute chart, 15-minute chart, and the 5-minute chart. It'll look like this when I'm trading. But for the sake of the video, I'm going to make it all one chart, and we'll just cycle through timelines or time frames. But I'm going to draw an arrow to each of my justified adds. Okay. So let's say I was in this first position. Let's actually go here. Bar replay. So let's say that this is all I see, right? So then I'll drop down to the 1 minute chart. I see a fair value gap here. I'll say that this is a justified add with a stop loss, obviously break even. I'm never going to let it go red. And my take profit would be a 1 to 3 risk reward, right? So if price does come up and wicks me in, which it did right there, it wicked me in, added into this fair value gap here, that would have been another justified add. So as you can see, there's lots of positions. So while I'm short, right, because I'm short because we broke structure here, we changed character, we went from making higher highs and higher lows to now we made a lower low. So I want price to reverse and grab some more liquidity because I want it to go further down. And another big gem that I'll drop on you right now is mature traders know that when price goes against you, it's not always bad. You have to know when price is going against you and will keep going against you because obviously you don't want to be in that trade. But this little move up is actually really good for me if I'm in a short because that's grabbing liquidity from everybody who wants to go short, right? So if big money wants price to go further down and they think they missed out, they're not just going to push price all the way down, right? They can make more profit if they get in up here. Okay, so price moving against you isn't always bad. Now, again, you have to be careful to not bag hold a loser, and that because that's how you either A, blow an account, or B, at least have a big loser. So, like I said, let me draw an arrow to each of these add opportunities, and I will not add on every add opportunity because then, well, there's lots of reasons, but the main reason is because one, it'll mess with my average, and two, it will, if price goes against me and I have 3 adds, it's going to be really quick to stop me out at break even because now I'm back to like a full position, and my open P&L is going to hit stop loss break even way quicker. So with that said, I'm not going to add on every one of these adds, but here's an add here. Fair value gaps are some of my favorite ones to add on because they're just buildup of liquidity. So we retraced. My favorite add would have been that blue one because it's a break of structure for value gap. My stop loss would have been just net green, net red, and I'd be targeting the lows here. So that's a risk reward of 5.5. Okay, let me get rid of this one. So let's say I added on both of those and my TP just got hit. So I not only grabbed 2.5R here, I grabbed an additional 3.35R here, an additional 5.59 here. So I'm up, almost 9R in my adds alone, which equates to, if it's a fourth of a position, it equates to an extra 2R on a full position, right? So I hope this is starting to make sense. So another thing I'll do on the 5-minute candle, and I actually did this today, is a failed 2 up. So I knew we were grabbing liquidity here, and that's why I had my other position, which was probably that one there. But let's go to 5 minute here. So then I'll add in, close that. So this is a 5 minute failed 2. So quickly on the strat, a failed 2 up means that we broke liquidity on the buy side and closed bearish. So we were short-term bullish for a longer-term bearish, meaning that the move up was just a liquidity sweep. And so when price broke the lows of that candle, I am assuming that the bulls had full control, or sorry, the bears had full control, and we were going to target this low of day. Okay, so this is at least a 1R, 1-to-1 risk reward. I probably would let it move like this. Maybe I'd have my stops a little tighter, maybe 20 points. But I would let that give a little bit of wiggle room and breathing room. And as you can see, price eventually breaks that target. So then when we're looking here, okay, so we got another 1-to-1 risk to reward. So we're up 10R on ads already in this example. Okay, so then I'm looking at this break structure fair value gap. Stop loss would be net green or somewhere in here, 30 points. Go in, tag it, and then we break structure. And already hit 1R there. So now we're up 11R. And really the most drawdown I saw was about 15 points. Nothing really scary on a fourth of a position. Meanwhile, this position's still going, right? So simply put, the way that I add into a position is I treat it like a new position. So I need to be careful that I'm not giving it too much wiggle room, which is why on this trade here, my stop loss would have been a hard stop loss at this candle that created the fair value gap. And that's how I usually play that trade anyway. How I usually trade breaker structure fair value gaps is my stop loss is going to be above the candle that created the fair value gap, right? So, so really it's, you got to know what your entry structure is. Here's another ad right here as I'm typing, right? Another fair value gap, taking the low, stop loss above the candle that created it, at least a 1-to-1R, and taking the full trim off. So I hope that helped. Really, it's just I'm adding in partial size so that it doesn't affect my overall P&L, but I'm able to take a lot more profit out of one trade, because if I'm in this trade from up here and I'm trimming every 1R and I have 10 contracts, well, obviously the max I can do is a 10R trade. But if I catch those trades that are, 20+%, with me being able to add through all of that, I'm able to have huge winners. And because I'm entering with a partial size and adding in as I'm entering, my losers are going to be smaller. There's many times in the past couple weeks that, well, actually this month so far, other than this week, has been really good. But in July, there were a ton of times where I hit stop loss, but I was only in with a half or a quarter of my position. And so I'm taking, the report says I'm taking a -1R loss, but my P&L says I'm taking a 0.25R loss. And so that's a huge bonus to profitability, is when you're able to take smaller losses and you're able to add into these winners to make yourself have huge winning days and huge winning profits without risking more money. It's really quite simple when you look at it. Like, every time I add into a position, I have to be able to justify it and I just hit my keyboard there, but I have to be able to justify it as a new position. Same thing with dollar cost averaging. If I'm at dollar cost averaging and I'm in drawdown, if I'm adding into a position, I better be in a place where I'm able to say, okay, if I weren't already in this position, here's where I would add anyway, right? So hope that helped. Just a quick, 14-minute video on how I add to winners and keep my losses small. So hope you enjoyed the first edition of Teaching Tuesdays, and I'll see you guys next week. Have a good one, guys.